Comes in much better than anticipated, John. 390,000 jobs were restored last month. The forecast had dropped to 318 after that ADP number. The change in private payrolls, even better, 333,000. Of course, both of those are down from last month. Last month, we'd seen 428,000 and 406,000 for private. But manufacturing payrolls come in up 18,000. Those numbers from the prior month down 22,000. We've had a revision lower. So it does look like the economy may be slowing down just a little bit. The unemployment rate stays at 3.6%. We had anticipated in the Bloomberg survey it would drop to 3.5%. In part, that may be because the labor participation rate didn't move all that much. It does tick up to 62.3, the expectation from 62.2. But we'll have to go underneath the numbers to get a better picture of what happened on the household side. Average hourly earnings, that's the big number everybody's watching, come in weaker than anticipated. 0.3% higher for the month, 5.2% on a year-over-year basis, which is down from 5.5%. Now, in this kind of upside-down world that we've seen, guys, this is probably good news for the Fed. The numbers are weaker than expected, but still strong. So they do show maybe signs of a decelerating economy and decelerating inflation pressures without suggesting that the economy is going to fall off a cliff.
Neil Dutter of Renaissance Macro calling it Goldilocks-ish. Mike McKee, does that resonate with you?
Yeah, I think that's a fairly good way you could describe it, given the situation. This is only the beginning of what is supposed to be happening. But we've talked about this, and I know you guys have talked about it with some of your guests, the idea that because the markets have front-run the Fed a lot and have pushed rates up, you look at the whole yield curve, it's above where they think neutral is. Maybe we're seeing transmission a little bit more quickly into the economy. And that would be good news overall for the Fed. The biggest change that we have seen in terms of the employment data seems to be in leisure and hospitality. Again, up by 84,000 for the month. Food and drinking places up by 46,000. Now, of course, we're getting into the summer season when there would be more people going into the leisure business. We'd see some of the amusement parks and things open up, so there'll be some seasonal questions about that. But professional and business services still are number two at 75,000 higher. That suggests that companies are maybe starting to take on some part-time workers or contract workers to see how it goes and if they need to continue. Transportation and warehousing adding 47,000 jobs. And that's a category that we've only really just begun to watch because of the shift from buying in person to buying online. Construction, 36,000. It had been unchanged in April. So the construction industry is still strong in the month of May, but we are seeing signs that that might be starting to roll over. So all in all, paints a picture similar to the beige book, that the economy is slowing a little bit, but not falling off a cliff.